Hi everyone. So today I'm with Dom and we're going to be covering Celsius, the energy drink for Q3 of 2025. And Dom's going to get right into it.
Thank you, Matt. All right, sharing my screen. You can see it.
Yes, perfect.
Cool. So just going to quickly go over this Q3 article from November 6, 2025. So I don't know, about 2.5 weeks ago, 2 weeks ago. Essentially, most things I would say are going to be pretty positive from Celsius. A couple of things that will kind of help explain why their shares went down. We'll kind of dig into that. So kind of start from the top, work my way down. So as we can see, a few weeks ago, shares plummeted 11.5%. Obviously, you don't ever want to see that with a stock, but there is some reasoning for it. But again, we'll get into that in a teeny bit. Some quick numbers. Company reported adjusted earnings of 42 cents per share for third quarter, surpassed analysts at 28% is what they originally were thinking. So almost a double, which
Yeah,
is pretty good.
yeah,
Revenue reached 725.1 million, exceeding estimates of 715.7 million, which represents an increase of
wow.
173% from 265.7 million in the same quarter last year. So very good.
Yeah,
Again, like they're going to see a lot of positives here, but then a little bit more as we keep going. So growth primarily driven by recent acquisitions rather than organic performance. And this is kind of what I was alluding to, is that it's not all simply them just selling more and doing better. They also had acquisitions that kind of help like bottom line numbers, but weren't exactly just straight growth. So we'll kind of get into that a smidge as we go on. So total portfolio grew sales, excuse me, total portfolios grew retail sales by 31% year over year. Performance of individual brands varied significantly. Again, kind of mentioned that before. So Celsius actual brand increased just 13% year over year. Ali New acquired in April surged 114%. Rockstar Energy acquired in August saw a 9% decline. Celsius's brand market share kind of fell a teeny bit too, about 0.5% compared to last year, selling 11.2% of the market. So as we can see, having these other acquisitions has helped overall, but not everything has been panning out so far, just because they do have less market share, and some of the other things that they've acquired haven't done as well as they'd hoped. Um, they also have had better like long-term partnerships, which has kind of helped a little bit with them. So they mentioned PepsiCo and United Celsius, Alani Nu, and Rockstar Energy again, all under one portfolio, and so that way they can kind of use each other's like vendor systems, things like that, to kind of help themselves out, which we'll go over in a sec. So before that, though, company's gross margin improved to 51.3% from 46% in the year ago quarter, driven by lower promotional spending, favorable mix, and scale benefits. So in turn, international revenue grew 24% to 23.1 million. So again, like I was mentioning before, by being under one portfolio, they don't have to spend as much for like marketing and other types of vendor fees and things like that. It kind of helps to cut down on some of the costs. And that's actually what they mentioned in the last paragraph I'm going to go over, which is that they recorded 246.7 million in distributor termination costs related to transferring a portion of Ali News distribution to the PepsiCo system. And so PepsiCo agreed to fund these fees, resulting in net neutral cash position. So again, saving a little bit of money by having that agreement and that partnership in place. So overall, like I said, lots of good things coming from them. Some of their things that recently acquired aren't performing up to snuff, but other parts of the business are. And so, like, portfolio as a whole is doing good, even though they do have a slight dip in the market share. And so that's kind of it for Q3. I'll let Matt go over the financials of them and kind of take a look at that.
Okay. Thank you, Dom. Appreciate it.
Thank you.
All right. So I'm going to go ahead and share their future free cash flow growth to see what's going on. And to be quite honest with you, they did have a remarkable quarter, and you could see the bump there in free cash flow. But in the next 3 years, it doesn't look too hot. So you have 523 million right now. In the next 3 years, you're gonna be 503 million. So if anything, it's actually goes down slightly. So you have to be aware that this just could be a moment in time or a recovery period for Celsius, and the growth may not be sustained for that much longer. So if we check the financial health of the company, the financial health, there's really nothing to complain about too much. Cash and debt are pretty much on par, more or less so. You have high equity, so I think it looks fairly normal. They tackled on debt here from 2020 in 2025, so I'm guessing that's because of the recent acquisitions. They used some kind of debt financing to acquire the many companies that they did. So no surprise there. If we check the next slide, which is going to be my DCF is actually going to still say it's 88% undervalued, which is going to come pretty close in line with Tipranks. If we check Wall Street forecast, Wall Street's going to be a little bit harder. It's going to say it's overvalued by 20%. I think there is a good chance that perhaps that it is still undervalued. I think that it will grow, but maybe perhaps that not so much as a fast pace as it did once before. It seems that it's becoming a more mature company. And lastly, if we check Tipranks is going to say that it is a strong buy, 15 buys, one hold, one sell. So really good on that front. A low of 50. It's trading at $39 and an average 65. So it looks good. And perhaps, I think for like a 1 year to 2 year investment or trade, it probably will do probably pretty good. I would say overall, I think that, but for 5 years, 5 years, then I question the sustainability of it. Dom, is there anything you wanted to add?
No, nothing in particular. I think you did a pretty good job covering it all.
Okay. All right, great. All right. Thank you, Dom. Thank you, everyone.
Thank you.